Yeah, the recording has started. Very warm welcome, everyone, to the second webinar with OptieAcademy and also Vontobel. And maybe some of you have been also watching last time. Julian will kick off with turbos, limited turbos actually. Last month um, he did a presentation about the turbos. And today, another step, the limited turbos. And of course, Julian, you can kick off. The floor is yours, and you can also introduce yourself short for the audience. Welcome, Julian.
Welcome, everyone. So I'm Julien Leroy from Vontobel, and today we'll make a presentation about the turbos and the limited turbos. In July last month, we did a presentation about the open-end turbos. So you will see there are some similarities, but also some difference between the different kind of turbos. So I propose we can start now with the presentation. So let's go. First, quick word about Vontobel. So Vontobel is a Swiss bank, which is almost a century old, and we have our headquarters in Zurich. In the Netherlands, we are mostly known for our exchange-traded products. We are present on the Dutch market since 2017 with other issuers, of course. We are not only present in the Netherlands for ETPs, but also in Switzerland, of course, Germany, France, Italy, and the Nordics. And we are not only doing exchange-traded products, but all the things a normal bank is doing. And we also have offices in other countries, not only in Europe. We have offices in Hong Kong, in New York, for example. So Vontobel issues 3 different kinds of turbos in the Netherlands. The best turbos, we talked about the best turbos last month, and then there are the turbos and the limited turbos. So today we're going to talk about the turbos and the limited turbos. So these 3 types of product have many similarities, but also some specificities. So there are some differences between these 3 types of turbos, and that's what we're going to see. We issue all these types of turbo in long and in short on a wide range of underlyings. So we can find products on single stocks, on the major indices like the Dutch AEX, the German DAX, the French CAC 40, or the US indices. You also find currencies and commodities and precious metals also. A reminder, product is said to be long when its value increases with the value of the underlying asset, and a product is said to be short when its value increases when the value of the underlying asset decreases. So now let's talk about the turbos. And let's see the main characteristics of the products. So turbos are products with a strike and a barrier. So this is similar to the best turbos also. But in this case, the barrier is going to be different from the strike. So first, what is a barrier? A barrier, it's really a level. And when this level is reached by the price of the underlying asset of the product is deactivated. So it ceases to exist. And what matters is that if the barrier is reached, the product is deactivated. It doesn't matter if the barrier is reached for a long time or not. It's really just one time. If it's reached, the product is deactivated. And the strike, it's a level which is used in the computation of the price of the product. And in case of deactivation of the product, it's also used to compute the redemption value of the product. So the second characteristic is that these products are open-end products, so they don't have a maturity date, and potentially they can exist indefinitely. They will continue to exist as long as the barrier is not reached. And the last point here on this slide is that the financing costs related to this product are not directly paid by the investor, but they are passed on the product through the adjustment of the strike. And we'll see in the next slides where these financing costs are coming from. Also, one of the main characteristics of the turbos, which is common to 3 different types of turbos, in fact, it's that they are leverage products. So it means that if the underlying moves in the good direction for the product, the return of the product is going to be higher than the return of a direct investment in the underlying itself. But this, the leverage, it works in both ways. So if the underlying moved in the wrong direction, a direct investment in the underlying would have been better. So leverage, it has some benefits, but also some risks. And as already mentioned, they have a barrier. And if the barrier of the product is reached, the product is said to be knocked out or deactivated. And because the barrier is not equal to the strike of the product, the redemption value is going to be positive by turbos, which is not the case by best turbos, for example. Then the last main characteristic of turbos is how the price of the product is going to change when the price of the underlying changes. So if you have a turbo on a European stock quoting in euros, then if the product is long, its value is going to increase by 1 when the value of the underlying increases by 1. And if it's a short product, the value of the product is going to increase by 1 when the value of the underlying stock decreases by 1. But the turbo is not necessarily on one unit of underlying. It can be on another amount, another number of units of underlying. This is called the parity of the product, and it has to be taken into account. It's the parity. It's the number of units. It's the number of units of underlying which the value of the product depends on. It can be smaller than 1. Usually by Vontobel, it's going to be 1, 0.1, or even 0.01. There is a reason for that. If the value of the underlying is quite high, for example, if you take Amazon, which the stock price of Amazon is above $3,000 currently. So if you issue a product on Amazon, then the value of this product is going to be high. It's going to be in the hundreds of euros. So it's maybe a little bit too much for retail investors. So we prefer to take a parity which is going to be smaller, let's say 0.01, and then the value of the product is going to be around €1, between 1 and 10 euro. The parity is not affecting the return of the product. It's just to have correct prices for retail investors. So if the parity is 0.1 and you want to have the same position as a turbo on 1 unit of underlying, you just buy 10 units of the turbo. And of course, for the price variation, if the underlying is quoting in a different currency, you have to take the exchange rate into account. And here it's always the exchange rate, €1 against X units of foreign currency, which will be considered. That's why we divide by the exchange rate. So here you have a quick example of the price variation for a turbo. So in the first table, it's we have a stock quoting in euros, and we consider a product with a parity of 0.1. So, for example, if the stock price increases by €5, then the value of the turbo is going to increase by €5 multiplied by 0.1. So it's going to increase by 0.5 euros. And on the other hand, if the stock price decreases by €1, the value of the turbo is going to decrease by 0.1 euro here. Second table, it's almost the same, but we suppose that the underlying is quoting in US dollar. So you have to take into account the exchange rate. And here we suppose that €1 is equal to 1.1 US dollar. So you have to bring all the values in USD in euros. So you have first the price variation of the turbo in USD. So if the stock price increases by $1 here, if we suppose that it's a short product with a parity of 1, then the turbo is going to lose $1 in value, but with the exchange rate, it's going to be only minus 0.91 euros. The second example here, it's about the leverage and the relationship between the leverage of a turbo and the return of its underlying asset. So there is this simple relationship. It's not an exact relationship, but an approximation. The return of your turbo is simply going to be the leverage of the product at the moment you bought the product, multiplied by the return of the underlying asset over the period between the current moment and the moment you bought the turbo. So it's just this simple relation which approximates the return of the turbo. It's not an exact relationship because you're going to pay broker fees, which are going to decrease a little bit the effective return you're going to have, and also the financing costs of the products, which are going to decrease a little bit the effective return you're going to have. So here in these two tables, you see this relationship. So for example, if you take a turbo long with leverage 15, if the return of the underlying is 1%, you get 15% return. And if you have 10% return, then you have 150% return. Of course, things can go bad. And if you have a negative return with your turbo with leverage 15, with a minus 1% return, you have minus 15% performance. And if you have a minus 10% return on the underlying, then you lose your entire capital because it necessarily means that the barrier has been reached at some point. So you have a total loss in this case. So now a quick word about how the price of a turbo is computed and the price sensitivities also. So the price of a turbo, it's quite simple. You take the current value of the underlying, you take the current strike of the product, and you make the difference between both. So you take it's the value of the underlying minus the current strike. You multiply it by the parity if it's not 1, and if the underlying is quoting in a foreign currency, you divide it by the exchange rate, €1 against X units of foreign currency. For a short product, it's going to be slightly different. You're going to take the difference between the current strike and the current price of the underlying asset. Again, you multiply it by the parity and you divide it by the exchange rate if needed. The strike of a turbo is not going to be constant. As already mentioned, it's going to change every day due to the financing costs of the product. But during the day, the strike is going to be constant, and you use this strike to compute the value of the product. Now a quick word about the price sensitivities. Of course, the value of a long product is going to increase when the value of the underlying asset increases, and the value of the short product is going to increase when the value of the underlying asset decreases. But for both products, if the underlying is quoting in the foreign currency, if the exchange rate increases, the product is going to lose in value. So that's what is represented in this table. So now we're going to talk about the replication of turbos. So replication is to create a portfolio with different financial instruments, and this portfolio should have the same value as the product you want to replicate. So here we're going to find a way to have a portfolio which is going to have the same value as a long turbo. In this case, we're only going to talk about the long case. There are two reasons why it is interesting to talk about replication. First, you understand how the product is working, where the leverage is coming from, where the financing costs are coming from. So it really helps to understand these things. And second, it's what banks are doing when they are selling products. They are replicating the products to cover the risks. So for a turbo, it's quite similar to a best turbo for the replication. So if you want to buy an underlying, there is a possibility. It's you borrow a part of the money you need and you bring the rest. So that's what we're going to do. And here, the strike, it's going to be equal to the amount you borrow, but a loan always generates interest. So the strike is going to be equal to the amount you borrow plus the interest on the loan. So the strike of a product can really be understood as a financing lever. And then you also have the barrier. And as already mentioned, the barrier is the level at which you're going to sell the underlying, if the underlying price ever reached this level. You do this to make sure that you can pay back the loan. Here, since we want to replicate a turbo loan, the barrier is going to be higher than the strike. And if you want to keep this position every day, you have to repeat this process to make sure that you don't have to inject fresh money. You're going to borrow again the amount you borrowed yesterday plus the interest of the previous loan, and so far and so on, to be able to always pay back without having to inject fresh money in it. One important element with turbos, and so different with best turbos, is that the gap risk, it's the investors who bears it. The gap risk, it's the risk that you're not able to sell the underlying asset directly when the barrier is reached, but you're going to send it at a lower price and you're going to suffer a loss. On best turbos, there is a gap premium risk. So you pay this gap premium risk for the best turbo, and then it's the bank's problem. In some case, the gap premium risk is going to be too small and the bank is going to suffer a loss if the turbo is deactivated. Another case, it's going to be enough and maybe the bank is going to make some money on the gap premium risk. But on average, the bank is not making money with the gap premium risk, but it's only supposed to cover this gap risk. On a turbo, you don't have this gap premium, so it's really the person who buys a turbo who's going to bear this gap risk, and that's also the reason why there is this difference between the barrier and the strike. So here is an example to illustrate this. Let's suppose that the share X is currently trading at 50 euros. And we decide to borrow 40 euros over one day. So we have to bring 10 euros to buy the stock. Then we have the 50 euros and we can buy the stocks. But the loan is going to generate interest. Here we can suppose 2% interest annualized. So over one day, we will have to pay 0.002 interest. So we're going to set the strike at 40.002. This is going to be on financing level. And to make sure that we can pay back what we owe, we're going to set a barrier equal to 44. So when the stock reaches 44, we sell it. And with the amount we get from selling the stock, we pay back the loan. So here you can see on the graph, you have on one side the share and our replication portfolio. So 40 euros loan plus 10 euros cap. So then what happens? So for example, stock price increases to 55. So we have the following. We haven't bought the share, which is worth 55, but on the other hand, we still have to pay back the 40s plus the interest. So what we get in the end is the difference between 55 and 40.002. So we have a capital which is now worth 14.998 euros. So we made a clear win in this situation. But again, if the barrier is reached, then we close the position. but we are not sure that we can effectively sell the underlying asset directly at 44 euros. Maybe the first price at which we can sell the underlying is going to be 43.90. So here we're going to lose 10 cents due to this gap risk. So if the barrier is reached and we can only sell at 43.9, then what we get is only the difference between 43.9 and the strike. So we only get 3.898 euros in this case. So this is the impact on the gap risk. And by with turbos, it's the investors who bears this gap risk because the redemption value is computed as follow. It's going to be the difference between the price at which the bank closes the position and the strike. This is going to be the redemption value of a turbo. For a short, it's going to be the opposite. It's going to be a difference between the strike and the value of the underlying asset. Now, let's suppose that we want to keep this position running and we don't want to add any fresh money to it. So what can we do? We have to pay back the initial loan of 40 plus the interest. So we borrowed this amount. So we borrowed this time 40.002. And this is going to generate new interest. We have a new financing level. So we have a new strike, which is here in this case going to be 40.004. Here on this graph, you can see the new situation. With in red at the top, they're very small, the total financing cost. You have in yellow the initial loan and the capital here. So then after some days, we have iterated this process. We can, for example, suppose that we have in total 5 euros of financing cost for this period of time. So first situation, stocks go to 70. So what does the investor have? He's going to get 70 minus 5 minus 40. That's what he's going to get. On the other hand, maybe the stock is going to trade at 50 euros. So the investor is going to lose money due to the financing cost. So it's going to get 50 minus 5 minus 40. So only 5 in the second case. And again, if at some point the barrier is reached, the position is closed, and the investor gets the difference between the first price at which you can close the position effectively and the strike. So here, a little word about the strike of the product and the adjustment of the strike. So every day the strike is adjusted by the financing costs for the new day. So it's the previous strike plus the financing cost for the new day. Here in this table, we suppose it's 2% financing cost for turbo, which is realistic. So you can see the evolution. So the strike is not going to dramatically increase, but every day it increases a little bit. So if the stock remains constant, the value of your position is going to decrease. The value of turbo is going to decrease every day by the financing costs if the stock doesn't move. And since the barrier and the strikes are different, and that the strike is increasing every day, at some point you also need to adjust your barrier. This is done once a month, and it's adjusted as follows. You take the level of the strike, the risk buffer, which you can find in the final terms of the product. It's something which is set when the product is issued, and then you use this fixed risk buffer when you adjust your barrier. So the new barrier is going to be the strike of the product multiplied by 1 plus the risk buffer to have a barrier which is going to be higher than the strike. So to sum up, the strike is adjusted every day and the barrier only once a month. So here it's a kind of disclaimer, don't do it at home disclaimer, because I've explained you how turbos are working. So could be an idea of doing it yourself, but there are several problems by doing it yourself. First, you're not going to get the loan due to the risky structure of the investment you want to make. It's very likely that nobody's going to lend you the money, so it's not going to be possible to do such a structure. Second problem is that if someone lends you money, you're going to pay high interest rates in this case. Then you have the problem of accessing the market. This especially true for commodities, or if you want to replicate a short position. And if it's foreign underlying, you have the problem with the foreign exchange market. You're going to have high costs. So overall, it's not a good idea to replicate the product yourself. It's better to buy it from an issuer. And the last point is, this is exactly what banks are doing when we are selling a product. So it means that if you win money with Turbo, we are not going to lose money. And if you lose money, we're not going to win money on your loss. So we don't bet against the people who are buying products from us. So it covers our risks, and whatever happens, the only money we're making is from the spread between the selling price and the buy price we're quoting. So that was it for the turbo part. Now we can talk about the limited turbo. It's going to be very short because a lot of stuff is common to turbos and limited turbos. So it's just like 3 slides, and it's going to be mainly the difference between the limited turbos and the turbos. So as already mentioned, there are many similarities between limited turbos and turbos. For example, they are both leverage products. So everything we said about the leverage is still true for limited turbos. So the previous slides are still true for limited turbos, so there is no point in doing it again. For the price movements with respect to the underlying, it's also the same. If the value of the underlying increases by 1, the value of a limited turbo long is going to increase by 1 if it's parity 1, if it's quoting in euros. So it's same stuff again. The product also has a barrier and a strike with the same meaning for both words. So this is also the same. And again, if the barrier is reached, the product ceases to exist. So this is also the same. But there are some differences between limited turbos and turbos. And one of the major differences is that limited turbos have a maturity date. So what it means is when the maturity date is reached, the product ceases to exist, and then its redemption value, its final value, is going to be computed. For example, if you buy a limited turbo with maturity date September 10th, then on September 10th, the final value of the product is going to be computed, and then it ceases to exist. So you cannot trade the product on September 11th or September 12th. September 10th, it's going to be the last day of existence of the product. And then you get the final value of the product. Another difference is that here, the strike is going to be equal to the barrier. And as a consequence, if the barrier is reached, the investor suffers a total loss of the capital invested. So this is clearly important. And the last point is that strike and barrier are constant, and there are no adjustment which is done. This is a clear difference between both types of products. Here a little word about pricing. So at maturity for limited turbo, the value of the product is for long turbo is simply going to be the difference between the price of the underlying at maturity date minus the strike of the product multiplied by the parity and divided by the exchange rate if needed. For a short product, what you get on maturity is very similar again, but the difference is that you get the difference between the strike minus the value of the underlying asset at maturity, again multiplied by parity and divided by exchange rate. Now a quick word about the price of the product. It looks like the price of a turbo, but it's an approximation. It's not an exact relationship. but the price of the product should be around this approximation. So the price of the product should be around the difference between the current value of the underlying minus the strike, again multiplied by parity and dividing by exchange rate for long products, and for short it's strike minus underlying's value. It's not an exact relationship because stocks are often paying dividend. So for dividend paying shares, there is a dividend factor which is going to be applied, and it's going to be slightly different from this price, but it remains a correct approximation of the price of a limited turbo. So now we are going to talk a little bit about risks and the benefits of turbos and limited turbos, starting with the risks. So you have the risk related to leverage, as we already mentioned it. So if the underlying goes in the wrong direction, direct investment would have been better. Then you have the risk of losing your entire capital. It's especially true for limited turbos since the barrier is equal to the strike. So when it's reached, it's a total loss for the investor. But it can also, in some rare cases, occur with turbos. For example, if let's say you have a turbo with a barrier at 45 and a strike at 40, and yesterday the underlying closed at 46 euros, and this morning when it opened directly at 38 euros. So you're going to get the difference between the price at which we can close the position and the strike if it's positive. Here it's going to be negative, so you lose your entire capital invested, and the bank is taking the rest of the gap risk. Here, so it can happen in this type of case, but it's quite rare. Then you have the risk of issuer default. This is true for all issuers, not only Vontobel. If the issuer defaults, then you may lose all your invested capital. So far, it never happened in Europe that an issuer defaulted. And for large banks, you can see the credit rates to get information about the risk of issuer default, for example. The last risk is the risk of termination of the product. Under some circumstances, it may happen that we terminate the product, and then the investor gets the termination value of the product, and he can suffer a loss due to this. For example, it happens when an underlying is not quoted anymore, and then we cannot quote products on this underlying, and we have to terminate all the products. So it's really in this type of situation. So now for the benefits. First, it allows you to enter position in many underlyings, and such as stocks, indices, commodities, or currencies also. And for some underlying classes, it's hard for retail investors to take position on, especially commodities. Indices, it can be hard also, because if you want to take a direct position in an index, you'd have to buy all the components. So it's going to be difficult. Also, turbos and limited turbos enables you to enter short position, which is almost impossible for retail investors without using derivatives. The leverage was on the risk side, but it's also on the benefits, because if things are going well, you're going to make a nice return. So leverage is a risk and also what investors are looking for, because they want to get this multiplied return compared to the return of the underlying. Also, one of the benefits is when you invest in limited turbos or turbos, the maximum losses you can suffer is the capital you initially invested. You're not going to lose more. So if you invest 100 euros in a turbo, you lose at maximum 100 euros. You're not going to lose more. And the last benefit is once you enter in a position with a limited turbo or turbo, you don't need to add any further capital to it. We're never going to ask you to add some money to your position. You buy the product, that's all you're going to pay, and you can keep it as long as you want. So now, before I let Jan and Harry speak, a quick word about the knockout hours. The products can only be deactivated when the underlying is quoting. So for European stocks and indices, it's going to be between 9 and 5:30. For US, it's going to be 3:30 to 10 p.m. So here you have the entire table. But the products are quoting on a longer time period during the day. For example, on indices, it's going to be from 8 to 22. We do this by computing a theoretical underlying price using different instruments to price it before market opening and after market closing. This increases the liquidity of a product, so it gives you the opportunity to trade these products longer. But of course, because it's not directly the underlying itself, the product cannot be deactivated outside of the trading hours of the underlying. So for European indices, it's only going to be between 9 and 5:30. So here you have the entire table. And here you have the information about Vontobel's website, where you can find all the information about our products and also our contact. So if you have any question concerning Vontobel products, you can phone us or you can write us an email and we will answer to all your questions. So that's it for my part. Now I let you, Jan and Harry, talk a little bit.
Thanks very much for your brief and concise explanation, Julian. Maybe there are some questions of the audience. And in the meanwhile, I also put kind of CTA to the upside. It was subscribe for free Turbo Trade of the Week. And some of you already are following our Turbo Trades, and you can subscribe for free to have some more insights and also some our insights of long or short turbos on Vontobel. And who of you do already have and follow these, read these articles? So I'm curious if some people are already subscribed. I'm not sure if if you can hear me well, but thank you. I will put the slideshow to Harry, and I will put Harry to work a little bit and let's take a look. If there's a question for Julian, you can ask now. If not, you can also keep it up for later, and in the end, we will do that again, and we'll answer the questions. Vontobel, this is our presentation coming up. Okay, thank you very much, Ruth. A short and brief introduction of Harry and me, and this is a picture of a couple of years ago. You can see that this Harry is a real heavyweight with a green white jacket, walking straight out of the floor of the options exchange, and next to it is, of course, next to Harry is me. And we used to trade at the European Option Exchange Amsterdam, and there we learned how to trade options and futures and how to manage risk. Now later on we moved on, of course, to the screen trading, and we have more than 24 screens or maybe 48 screens. But if you see well, then we only use 4. But the thing is that you need some strategy and advantage, and you have to have some knowledge and skills. And that's why we are also hosting these webinars, these kind of webinars, because we would like to let you know and educate you how you can manage your risk in a good way. And as Julian told, with turbos, you can enter a long or short position with on forehand already that you that your risk is the only investment that you are putting in, and you cannot lose more than your investment. That is nice. And if it's right, if your vision is right, then then you earn quite good bucks, of course. Later on, we'll go to the long trade in Philips and also a trade short in ASML. Of course, we have plenty of time for Q&A for you. And of course, the inevitable disclaimer and the mission. Our mission is to help investors and traders to be successful, both novice and also experienced traders. And everything what we are offering here, and we are putting our insights, that is for yeah, educational purposes. We are sharing our insights so that you can learn of it, and we are not eligible and responsible for any loss you might occur. And I also put a link. If you are interested in Vontobel products, you can go to the link and to take a look for more information. A short yeah, a short history of OptieAcademy. Back in 2011, it was 10 years ago. Um, Harry had the brilliant idea to start yeah, OptieAcademy and to found OptieAcademy to educate options traders and to educate traders um, with more information about options, how to use them well in a responsible manner. And it's very important that if you don't know what you're doing, yeah, there is big risk. And we are teaching and helping and supporting, coaching novice and experienced traders and investors to become better investors and traders. We do that with coaching seminars and also webinars, and also Harry has written ebooks, and also we have written an ebook, successful trading, successful investing. And the very nice thing is also we put also many things in practice with our recommendation, but also we organize from time to time. Pre-corona, we've been to Istanbul, Alicante, Lisboa, and also Cyprus. That was in 2019. It was very good fun. Between 12 and 18 people always. We were there with a nice group and day trading or trading during the week. Yeah, maybe yeah, I would like to kick off with Philips. And our trading insight is that recently Philips was presenting the Q2 results, and they had a 4.2 billion turnover versus 4.4 billion in the same period last year. And but most focus was on the adjusted EBITDA earnings, and it was 532 million versus 390 million in the same period last year. So there was a very big increase, and also the profit margin was beyond analyst expectation. It was 12.6% versus 12.4%. But the very nice thing is that the share buyback program of 1.5 billion euros would have been yeah, a catalyst or a kind of a good push for the stock price. And Morgan Stanley, they put also Philips on the overweight, and yeah, they put a target of 52 euros on the stock price. Albeit, and also despite these good numbers and good figures, the stock price was being hammered severely and currently under pressure. We also dipped briefly, yeah, towards 37 euros, at least below 40 euros, and there was because of the recall, 2 times the recall of 1 million breathing assistance machines and Dutch's apnea devices, and that is a big hit on the market price, big pressure, selling pressure. But we think it is not a structural issue, and yeah, the market priced in, I think, also these yeah, this negative news. So what is our vision? We expect a recovery. Of course, we don't have a crystal ball here, but I think that the upside potential is now better than the downside potential. So this is the chart. Here you see the brief, yeah, very heavy, heavy sell-off. And as you can see, we have recently the 1, 2, 3, 3 green shoots. So that is very nice. But just before the earnings, we saw also a big rally below from below 40 towards 41 euros. And after the earnings, it yeah, the market price, the stock price has been slashed again. But of course, this is a daily chart, but on the hourly chart, also the a little bit more. a shorter time frame, you see a kind of turnaround in the stock price. I have to admit that we have to have some margin to the downside, and also you have to have some time. In my opinion, I would like to have a turbo long or a best turbo long, not limited. Why not limited? Because suppose, for instance, there's a limited turbo until September. I would like to have turbo which is without limitation with the time. Yeah, so what we have chosen, we are bullish on Philips. We also issued a bullish long, Philips long, and this ISIN code that is here. You can also find in Maxim, the platform, the TWS, you can type in a copy paste DE and then the numbers, and then exactly you get the price and also the product on Maxim and also other interactive brokers. And the knockout level is 33.96, and that means that the distance to this knockout level at the time of presenting or preparing this presentation is more or less 11%, and the ratio is 0.1. So that means that you need 10 turbos to replicate one share. And here you see that the bid ask is 43.44. That means that if you buy one turbo, then it's 44 cents. So 100 turbos, that means that you have an exposure of 10 stocks and 10 shares of Philips. Then you have to pay 44 euros with 100 turbos. So with 1,000 turbos, you invest 440 euros, and that is the maximum investment and the maximum risk you take. How does it look like? As Julian also explained very well, that the stock price is determining, of course, the price of the product, and the turbo long in this case. On the left-hand side, you see May 20. It was around below 40 cents, and the stock price was rising, and from let's say 36 to 45, 9 points. And here you see that the stock price, not the stock price, the turbo price has risen from 0.4 to 1.2, even more. So the price quadrupled. That means that your investment also would have been ×3, and that is better return in comparison with if you put the same money in the stock price and in the stock itself. So if you would like to look for more information, go to Vontobel, of course. And now I would like to go to ASML, and if Harry can switch on the microphone and maybe also your video. If you switch it on, then the floor is yours, Harry. Yeah, there must.
I hope you can hear me, because I don't see myself. That's good. Okay, yeah, I would like to tell you something about ASML. Yeah, I think every Dutch citizen knows that ASML is now the star, and yeah, their performance is incredible when you look at now the last year. So it is. It came to the yearly high last week, and yeah, okay. I'm not really technical guy, but yeah, they're doing in wafer stepper, and yeah, it is really tiny. You can't see them with the eye nearly, and they're located close to Eindhoven. They were a former daughter of Philips. That was, I think, the most stupid thing Philips ever did, to sell their daughter. But on the other hand, probably, yeah, their value is now much higher than whole Philips. But I think, yeah, in reality that the last 5 years they would not achieve that on when they were still the daughter of Philips. They would not have get, I think, that much space from Philips, and now they had every possibility to grow that fast. And that you see also in the AEX index. When I was trading options in Amsterdam on the EOE, then it was more or less a bank index. You had ING, even Fortis was there, and Aegon and ABN AMRO. And those four more or less were 40% of the index. But now, some people even joke you can recall the AEX now to ASML index, because they are by far now the most heavy component with nearly 20% weight. So that means, it has a really high value, and the higher it goes, also their value in the index is raising. And the stock price more or less was around 670. It opened higher this morning. It dropped then afterwards around 4, but the last hour it gained a bit. So, but with ASML, 5 or 10 points is normal in a day. So when you look at their value, the value is really high. Even when you compare it to the forward price earnings ratio, it still is nearly 40. And okay, you can discuss about what is reasonable. But in my time as a trader, I have been trading also around 2000 really technical stocks that not exist anymore, and I don't think that will happen to ASML. But of course, it can be a time that the value went too much up, and a reasonable correction, I won't say more than 10%, but if a stock is nearly 700, 10% is 70 points. So if it drops 70 points, you can make a lot of money also on the downside. Because last year, as I say, it already doubled nearly. And I remember it was, I think, 3-4 years ago, the stock price moved towards 135. So I bought then a call, I remember, but pity I sold too early with only a couple euros profit. But anyway, the investors' expectation is really high, and in my opinion, it's priced for perfection. So I don't know what happens in the future. They just had their figures; they were good, and but on the other hand, September is coming. That in my time on the market, I had a couple of times that September, October, there were correction months. I know one thing for sure: if the market will have a correction, then I'm thinking that ASML will at least have a more severe correction, and then it can go the other way around. So I won't say it will be a big correction, but myself, as I say, I think a 10% correction can come, but it depends, of course, also on the rest of the market. Let's see if I can move on. Oh, this was Philips. Let's go down.
Op de link te klikken.
Yeah, but I did. But Naar beneden. Scroll even naar beneden. Yeah, this is a chart of ASML. Yeah, you can see it was around 360 last December. So nearly doubled from then. So in 8 months, incredible movement. And you see also in February, March, they got approximately a drop of 80 points. And also in May, June, it was 40, 50 points. And but since the last 6 weeks, it went up more than 100 points. So I think it is priced for perfection, and therefore we would like in a trade. Still not a good one. Yeah, I found. Yeah, this. So it was when I made this around 672. It's still around that level, and of course we must see where it opens tomorrow. But if you are a bit bearish, and you can combine, of course, also put a long position in Philips, and then a turbo short of ASML. Yeah, we put also here the icing code, and there is distance to the knockout level is 16%. So I won't say this is the highest; it can't go higher. But of course, give and take, 100 points is the stop loss. And the price of today was approximately 1063, and therefore I think you can put a small short position on it, and but always calculate that it can go higher, of course. But therefore we have big distance also to the knockout level, because suppose if you do 690, then one good day it can raise 20 points, as we saw in the chart. That can happen in ASML in one day, of course, in a good day, but it means also in a bad trading day, it can also move 20 points lower. So we'll see what happens, of course. But I think with those two ideas, you have ideas about the market. The market always, as I say it sometimes, in the market 2 and 2 is not 4, but it is like 5 minus 1. It goes a bit further, and later you think how the market could extend that much. You see Philips, it maybe extend to the downside, and maybe ASML is the opposite, to the upside. But okay, time will tell what will happen, of course. But I think with those two ideas, you can profit maybe one of two, and the other may be stable. Then still you have a good profit for those two things. And of course, if you think it can go higher and higher, then you can wait till the rebound, the correction starts a bit. That is up to you, of course. But I must say, on this level, I think already it's priced in a lot on the good side. So it's up to you when you will decide to wait or not, of course. I don't see any questions. Here you can see also what happened since emission. It went minus 24%, and so you must think opposite, of course. I see, it is around 9 o'clock. Yeah, I would say it. We always give presentations in a golf place, and we saw this picture. Yeah, we can't make it easier for you, so we give some ideas, and of course, time will tell if it happens that way. But I think with those two ideas, yeah, for you, you can the markets right easily. I don't know from young Robert if there are some questions
Yeah, not
left.
really question, but I would like to round off with an explanation. If I'm, do you hear me well actually?
Hmm?
Oh, you don't hear me? Oh, yes.
I hear you.
Yeah, do you hear me now?
Yeah.
Julian, are you there?
Yeah, I hear you.
Okay, sorry. Yeah, I just switched. Maybe it's good to do a kind of exercise. I would like to do the share screening functionality, and I hope that I will succeed in that. And will this thread be sent by email?
No, I lost you.
Yeah, okay. Application, no, the screen, full screen. If I'm not, okay, I have screen two.
Yeah.
Okay, screen two is here. So that means that we are trading these products. Yeah, we are trading with Maxim, and this interactive brokers platform. I would like to show you how you can find the product. The thing is that what you can do, you can go to the Vontobel place here, to the URL. Then you go to that. You go to the web page, and you can find products. And you have to find out yourself how you come there. But I searched, for instance, for turbo long, and yesterday we did a trade on Micron with options. But for instance, if you go to the products, have one product, these are the turbos and other things, and you can choose, for instance, which product type. You can select, for instance, best turbo, direction long, for instance, and now. Ja, hij heeft echo. Maar kun jij de microfoon uitzetten misschien? Oké. Okay. Can you hear me still or not? Because Joop not. Okay, but you go to the underlying values. For instance, Micron. I would like to buy Micron, and Micron technology is tradable. And here you see the longs. Thank you. Here you see a lot of possibilities, and you can see I suggest not to take the longs with a very high leverage, and I prefer leverage between 5 and 7. So suppose I would like to buy the Micron technology turbo long, and here it's type call, but this is a turbo long. Click on the line, and here it is. There is the ISIN code. Copy the ISIN code, and if it's right, you go to Maxim and put it on the line. You copy paste it, enter, and would you like to add underlying value like for the selected derivatives? Yes, like this. There you see that stock price has been hammered 5%. Then you can say, okay, I would like to buy this turbo, and price is more or less 93. So what you can do is click on the line of the structured products, and let's take a look how I can do that. Yeah. And there's a little bit of delay of the price because I want to buy this product. Here it is. Then you can say, okay, if I buy some, for instance, 100 of these products, 100 turbos, limit price, and not is the limit price, of course, but I have to have the quantity here, and the limit price is, for instance, 0.93. That means that I put 93 on the table. Transmit. Let's take a look. Okay, let's take a look how we can solve that. Okay, I have a limitation for myself. 10,000. Why I did not, I don't know. Update. Okay. Then, okay. Yeah, the things that interactive brokers also put some restrictions. That means that you can put restrictions yourself, that you can buy or sell the amount. I put a limitation for myself, for instance, for a 5 default, but I have to adjust that. But that is in a nutshell how you can trade the products. So I hope that is a little bit, yeah, I hope that this is valuable for a good insight. If there are some questions for Harry, for Julia, for me, feel free to type it in the chat. And also this video or this webinar has been recorded, so the video will be rendered later on YouTube, and we will send the recording later on as well. Julian, do you have some remarks or questions?
I think the best thing I can say to potential investors in turbos or best turbos or limited turbos is really, if you have any question concerning the product, you should
Julian,
contact the issuer of the
video
product.
is there, but yeah, I think you're in.
Okay, you heard me, or
yes, I hear you. Yeah, do you have some remarks, maybe?
Yes, so I just said that really what matters is if investors have questions about products, they should really ask the issuer about these products before buying the product, because it's really important to understand all the characteristics of the products you want to invest in. And it's better to take 5 minutes to ask the issuer than to invest in a product and then see that it's not really the product you wanted to buy.
Here. Okay. Okay, thanks very much, everyone, for your attendance, and the recording will be available tomorrow. Julian, thank you very much for your presentation, of course, and also everyone who was attending, and of course, Harry, thank you very much for your presentation as well. And for more information, go to our website. Also, subscribe for our free Turbo Trade of the Week. And Friday will be in the box as well, if you are subscribed, of course. Thank you very much for watching, and see you next time. See you next month. Julian, merci beaucoup. Thank you very much.
Thank you, Jan. Goodbye.
Thanks very much, Ruud, Harry, Julian. We will speak to each other later. And have a nice evening, and see you next time. Bye-bye.